Hi everyone, welcome to today's video. So if you go and check the portfolio of biggest investors on the planet like Mr. Warren Buffett, Mr. Ray Dalio, Mr. Rakesh Jhunjhunwala, you will notice that these people generally tend to invest from a long-term basis. So they will buy a good stock very early on, they will stay put and they will reap benefits with the growth of the company. Now this is the same strategy that I advocate on this channel as well, that identify good stocks, stay invested and continue holding it and reap benefits. This is the simplest way of building wealth, but many a times what happens is that retail investors like us would want to invest on a short-term basis. Why? Because sometimes we do goal-based investing that we need to study abroad or we need to complete our MBA or marriage expenses or car or home loan expenses, all that stuff. So from that particular perspective, we must also understand the aspects around short-term investing. So I thought that I will shoot a video where I will discuss 3 specific options with you on short-term investing. These 3 options have very different risk profiles. All 3 options are good and will allow you to make money in the short term. Now, the 3 options are corporate bond options by Wint Wealth. Now, Wint Wealth is also the sponsor of this video and I am an investor in that company. Just because that is the case does not mean that I will not share the pros and cons. I will genuinely share what the pros and cons of investing via Wint Wealth is. Second, I'm going to discuss about investing via debt funds. So that is option 2. Third, I'm going to discuss about swing trading, especially from a short-term perspective. So these 3 options I'm going to discuss. It will be a very useful video for you, especially if you're looking to invest money for a horizon of 1 to 4 years. So that is the time frame we will keep in mind. So let us get the discussion started. And first and foremost, let us understand about the Wint Wealth investing option. So what exactly is Wint Wealth? So Wint Wealth basically is a platform through which retail investors can invest in corporate bonds. So this brings us to the discussion that what corporate bonds exactly are and why should retail investors consider it. Now let us pick the example of our favorite ITC. Now ITC is a business. It requires money in order to build new factories, launch new products, hire people, all that bunch of different things. So it requires what? Capital or money. Now there are 2 ways in which ITC can raise money. One is called as equity financing and the other is called as debt financing. Equity financing simply means that they take a part of their company, sell 10% of its stock or shares where in the stock market, and then people like you and me buy ITC stock, then we get stuck with it. Then we keep on making ITC memes. So that is equity financing. The second option is called as debt financing. Now debt simply means taking a loan. Now a company like ITC can go and take a loan from a bank. Now that essentially might not be a great option because the banks might not give them good rates, bunch of different problems, or there might be lunchtime at SBI, so ITC people will not get a loan. Okay, so SBI joke finally. Or the other option is that ITC can go to the bond market. So similar to stock market, there is bond market. ITC goes there and launches its bond. So essentially, Wint Wealth allows you to invest in corporate bonds or corporate debts. So there are a bunch of corporate firms that are looking to raise money via corporate bonds, and a company like Wint Wealth allow retail investors to invest in these corporate bonds. So that is the overall summary of Wint Wealth, and let me show you a couple of examples so these concepts get clarified. So for example, if you go on Wint Wealth's website and check the assets, so you can see that there is a company called as Oxo and India Shelter, and they are launching their bonds. This gets launched on 23rd March, and you can go out and check the asset details. So we'll click there. This shows that this is a senior secured bond. It will pay you 9.5% interest, and interest will be paid annually. This is a 2-year tenure and you will get the principal amount at maturity. Now, if you go through it, you will see a series of different options. Also, the minimum investment required here is 10,000 rupees. So even retail investors can participate, so to say. Now you can go through this tab and you can check out all the other details associated with this particular bond. If you like it, you can buy more units also. So all these functionalities are there. So I hope this clarifies that Wint Wealth is allowing you to purchase some corporate bonds that are being listed by corporate firms. So let us very quickly understand the advantages and disadvantages of investing via Wint Wealth. So there are 3 specific pros, 3 specific cons. So I'll do a very quick commentary there. So first and foremost, the returns that retail investors make via Wint Wealth, it's reasonable. For example, you will usually end up making between 9 to 11% return, which is very good. It is higher than fixed deposit and also higher than the historic returns of majority of the debt mutual funds. So this is the first key advantage, that you are getting higher returns, and also the tenure or the time of the loan is shorter. So it's usually around 2 years. Second key point is that the ticket size is very small. So for example, the example that I showed you earlier, the ticket size was only 10,000 rupees to invest. Third key advantage is the vetting process. For example, if you have to go and scout for corporate bonds, then 2 problems will happen. That number 1, you will have a hard time getting access to corporate bonds that you will not know which platform to go to purchase which bond. So that becomes a problem. Second key problem that you will have is that even if you come across some bond by a random corporate, you would not be sure if they're telling you the truth. So there is an entire vetting process that goes into it, that if the corporate is credible, are they backed substantially, have the rated agencies vetted them, and a bunch of other nuances. So bottom line is that this vetting process is done by the Wint Wealth team, and they are presenting the entire pro and con analysis in front of you. So please go check. This is not a recommendation to buy. At least go and read about the instrument. If it makes sense to you, go and purchase it. So does that mean that everything is great? You should pour all your money in. There is no risk at all. No, nothing like that. There are 3 specific risks which is listed on Wint Wealth's website. So let me take you very quickly through it. So the first risk is called as the credit risk, that you lend your money to ITC or any other corporate, and that corporate goes bankrupt, then you might lose all your money. Does that usually happen? It happens rarely, especially in debt, because what happens is that if a company gets bankrupt, for example, let's imagine that ITC goes bankrupt. Now I'll see a lot of people commenting that, Akshat, you know what, I have like so much holding. Why did you take like ITC's example? So let's play along. So let's imagine that ITC goes bankrupt. Then the process would be that its assets will be liquidated. Factories, their buses, their machines, whatnot, right? So everything will be sold and some money will be procured. So that pool of money is first distributed to bondholders. So they get first dibs on that money. So generally speaking, even in the case of liquidation, it's not as if that your entire sum that you have invested in the bond market, it goes to zero. Generally, that does not happen. But can it technically happen? Yes, it can happen. This is the first risk. This is called as credit risk. But having said this, there is a team at the back end at Wint Wealth which is vetting everything. So it's not guaranteed that 100% you will not lose your money, but the chances are very, very rare. The second key risk is called as a liquidity risk. So liquidity simply means that, for example, if you have invested 1,000 rupee and you are expecting a yearly interest on it, and at the end of 2-year period, you are expecting the principal payment on it as well. Then many a times company do not have liquidity. For example, if the business is not doing well, they will not have the cash with them to pay you for some reason. So it becomes like a situation where companies become like Babu Bhaiya from Hera Fairy. So every time people used to come to Babu Bhaiya paise de do. So kalana, right? So that's the liquidity risk that companies can have. Now the third risk is called as the fraud risk. Very easy to understand there, that for example, if the accounting is not clean, if the numbers have been fudged up, a classic case in point was the Satyam scam, right? That the entire account books were fudged to begin with. Now 100 different types of scams can come out, and that is called as fraud risk, that some kind of fraud happens, management fraud, siphoning off of money, and bunch of different bad stuff can happen. So these are 3 risks because of which the amount that you have invested via Wint Wealth can go to zero, because the company is not acting in the right spirit. But I hope in summary, this gives you a sense what investing via Wint Wealth would be like. You can go check out the asset. If it fits your risk portfolio, risk profile, and expected returns, you can go and invest it. I will categorize it as moderate risk option. Okay, so if this is the moderate risk option, can I talk about an option that is very less risky? Yes, I can talk about that. And that is called as debt fund investing. Now in debt fund investing, what are you doing? You are essentially purchasing debt mutual funds. So you must have seen that there are 100 different debt mutual funds that are out there. There can be ultra short, long, mid. That indicates a duration. For example, long-term debt mutual funds could be that you have to park your money for 5 years. Ultra overnight debt mutual fund means that you can withdraw your money even after 1 day. So that is the duration or the tenure of the bond. Now debt mutual fund, simply speaking, is a collection of debt. So rather than having debt from only ITC, you will have a debt from a bunch of companies, 2, 3, 4, right? So this becomes like a collection of debt. So that is what debt mutual fund investing means, that you pick a tenure, ultra short term, mid-term, long term. And what are you essentially getting into? You are purchasing a briefcase of debt. So that is what debt mutual fund means. So very quickly, let us discuss the advantages and disadvantages of debt fund. Now debt funds are of 100 types. So I'm just generalizing here. Essentially speaking, the risk on debt fund is on the lower side because you are investing in a collection of debts. So of course, if 1 or 2 of those companies default, then at least rest of your portfolio is prevented. So the risk profile goes down. The second advantage is that the debt fund, depending on the type of debt fund that you are purchasing, it usually gives you higher return than fixed deposit. So it is better than that. What are the disadvantages? There are 3 key disadvantages. Number 1, the returns are lower. compared to Wint Wealth. Second, the commissions on debt funds are higher. Third and finally, there is no clarity. You don't know where your money is getting invested. So let me demonstrate that by taking you to an example. So for example, if you check these three assets, these are top performing mid to long term duration funds. These are debt funds. And if you take a look at ICICI Prudential All Seasons Bond, now you would not know through the name that, okay, where your money is getting invested. Sometimes the underlying structure changes. So that clarity is less. When you go and invest via Wint Wealth, the clarity is more because you know exactly what you're investing into. Also take a look at the performance. For example, if you compare the 3-year return, it's approximately 8.44. For SBI Magnum, it's 8.35. For ICICI Prudential Gift, it's 9.15. In case of Wint, we were getting 9 to 11% in a tenure of 2 years. This is the difference, and also point to be noted that the three funds that I showed you, they are the top performing funds from a mid to long term perspective. So essentially, if you are purchasing debt mutual funds, then the returns are lower and also the risk profile is lower. Now let's talk about third and final option, which is a swing trading option. And this is a interesting technique that I will show you. So if you have some bulk money lying around and if you want to invest in the stock market directly, you can do that and you can take a simple swing trade. Let me show you an example. For example, here you can see that this is the Nifty 50 chart. There is a very clear resistance line. There is a very clear level of support lines. This is support 1. This is support 2. So there are very clear support and resistance lines, right? What you do is that you simply buy Nifty index fund here and you sell it off when Nifty hits here. So how much gain can you approximately make? So you can simply make roughly 6% return right now by not taking insane amount of risk. Why I'm saying that there is no insane amount of risk in this? Because Nifty always cuts its previous peak. It might happen that Nifty might break this resistance, S2 also, and it might fall below. For example, here is where that situation played out. So a bunch of bad things can also happen. But the point that I want to outline is that there is a system of doing swing trading. Is it risky? Yes, it is risky. But can you make returns out of it? The answer is yes, you can easily make returns out of it without using too much brain. Now I will show you this technique and discuss this technique on further videos. Otherwise, this video will get really long. Do let me know in the comment box if you would want me to do that. I will explain you the nuances. But meanwhile, do understand the fact that this swing trading method is the most risky one out of all three options that I discussed. So as per your risk profile, risk preferences and return preferences, you can go and invest in all three or even one of these options. I hope you enjoyed the video. Please press the like button and I will see you tomorrow.